Welcome back to Rockstock Channel. It is Thursday, February 13th, and we are back on the program Iola Hughes of Rho Motion, which recently got acquired by Benchmark. So effectively, Benchmark, Rho Motion. We've had Iola on the podcast before, maybe last year. Rodney has been outlier bullish from a demand perspective on energy storage solutions. And a lot of that has been, through our relationship, with Iola and the Rho Motion team and the research that, they've put out. So we're going to talk a lot about, grid storage and other applications, which I just got off the Albemarle earnings call, and they said that the grid storage market is now 20% of the lithium demand market, or overall lithium market, which is up from like 5% just a few years ago. So that's like something like 200,000 tons of lithium demand, and 200,000 tons is bigger than the entire lithium market was, 5 or 8 years ago. So we're in, a world, I just saw a Goldman note where they're still quite bearish based on, a lot of lithium supply. Lithium bulls like me and others, and a number of the work that the videos we've put out recently have been, talking up under Trump, AI, data centers, Tesla robo-taxis, and not just Tesla, but also in China. Robots, drones, military applications. The ESS market, I think, based on your data, grew 50%, last year. I think you're forecasting it to grow 60% or so. You'll let us know those details if I'm wrong about that. But I'd like to better understand from like a lithium. I think a lot of analysts have analyzed like the EV market, and we know your average battery pack size is 50, 60 kilowatt hours, and what that might translate into kind of lithium. But I don't think a lot of the sell side analysts have dug deep, into the ESS market and what that means for lithium demand. And we're seeing all these announcements. Solar is farms, huge solar farms being built, wind farms, and then there are batteries attached to them. But how do we get an understanding of like how much, are batteries involved in a solar or wind farm? Are they lithium batteries, right? And how much lithium, demand does that, translate into? So if you like this video, please like it and comment in the comments on YouTube or wherever else you are listening to this. If you want to follow Iola, you can do so at, what's your handle, Iola?
Rho Iola.
Rho Iola. So why don't you just reintroduce yourself, Iola, first, and what you do for Rho Motion and Benchmark, and you've put out some great data on Twitter and LinkedIn just in the past kind of couple of days with bullish, demand, both for grid storage and also Chinese EV demand. So I'll let you take it, from there, and then Rodney will get into his questions, and I'll have probably a few more along the way.
Yeah, certainly. Yeah, thanks for having me back. Always a very, very enjoyable conversation. For those who don't know me, my name's Iola. I'm head of research at Rho Motion. Rho Motion is a research house and consultancy specializing kind of in primarily the battery demand markets. As mentioned by Howard, we were acquired by Benchmark Mineral Intelligence kind of the middle of last year, which kind of puts us in a position now where we're really kind of providing dedicated analysis from mine to market across the kind of battery supply chain. As mentioned by Howard, storage has been kind of the shining light of the battery story in the last year or so. Those kind of growth figures that we've seen have been very impressive. We're expecting very strong growth again in 2025 on the back of incredibly strong pipelines that are growing really at kind of breakneck speed across the globe, and not just in China. I think some of the key data points just to pull out to start with, Howard mentioned, that point around 20% of lithium demand coming from the storage market. When we think about it in the kind of actual kind of demand of cells being deployed. Our market share is slightly lower, closer to kind of 16%, and that's because of the lags that you see in this market. So, we saw about 200 gigawatt hours installed last year compared to kind of wholesale ESS cells of closer to kind of 350, which gives us that slightly different lag. And that lag is longer in the storage market than in the EV space. I think one thing to highlight in particular is in the US market, more so than anywhere else, that percentage share of ESS compared to the lithium-ion space is greater than anywhere. So in 2024, we saw the ESS market share increase to 23%. And in 2025, we're expecting that to increase to around 27, 28%. So, in the US market, more than anywhere else, the kind of presence and the importance of the storage market is really key.
That's great. I mentioned in our latest video that the NextEra Energy, America's largest utility, which has nuclear plants, they have gas plants, they have solar and wind, and they were arguing for AI data centers, the most important solution, the quickest to deploy, but also the cheapest, is renewables, right? Solar and wind, plus batteries. And there's I saw some white papers, which also include and a little bit of natural gas, but they're saying nuclear will take a really long time, 5 or 6 years, and there's first of a kind risk attached to that. And even gas plants, the EPC contracts were very expensive, and supply chain made those not fast to deploy. But solar wind, fast to deploy, and they have a pipeline, I don't know, of 7 gigawatt hour. Their pipeline keeps growing, their backlog keeps growing. And then I look at that and I think, okay, how much lithium does NextEra need? How is this becoming critical to NextEra in the way that Ford and GM saw lithium being critical? And might you see some offtake agreements signed, from utility companies? So I just didn't how do we translate, a given company like this utility? And we have, I saw some research, you could see it's like Texas, it's Nevada, it's California, but also New York, where the deployments are happening. So could you just help us understand, are they all using lithium-ion batteries like back in the day, vanadium and other types of batteries, could have been, in the mix. But I keep coming back to kind of CATL, what Robin Zeng said in November, that he thinks grid storage will be 10 times the market of EVs. And we have CATL in their Hong Kong prospectus. Rodney tweeted today, I think even more bullish forecasts that they're citing than yours for ESS on a global basis. But just help us understand a given utility anywhere in the world, and their the lithium needs tied to this growth of renewables plus storage.
Yeah, definitely. So I mean, we discussed the other day, and I had a look at our project pipeline for NextEra. So one thing that we do at Rho Motion is we track every grid scale project globally and kind of where it is in the pipeline. So this is a database of about 6,500 projects globally, all at various stages of development, from proposal all the way through to coming online, which gives us a pretty good insight in terms of, okay, what's planned for the next few years. And for NextEra, we have, since 2021, they've deployed 11 gigawatt hours of storage, and they're in their pipeline. And this is a pipeline out to, even some of these projects aren't due until 2032, but we have 27 gigawatt hours of pipeline capacity just for NextEra as kind of one of the leading developers in the North American market. I think going the step from a developer to offtake of lithium is potentially one step too far of where the market is right now. We are seeing increasingly developers taking offtakes from cell or even kind of system level. We saw a really big one the other day, which was a 19 gigawatt hour offtake by a company called Mazda in Saudi Arabia from a cell manufacturer. we are seeing more and more of these come through, whether that's from cell to system or cell to developer or system to developer. But that step of lithium to developer is maybe one step removed from where this industry is, at least in its current form. And I'd say part of the reason why that is because of the availability of cells in this market. So, coming back to your point on what chemistries are being deployed, this market is dominated by LFP. LFP has become the chemistry of choice very rapidly over the last few years, and is at a point now where the incentives to install a different chemistry, actually outside of the US, is almost slim to none. In the US market, however, there are still potentially some incentives to install NCM, and that's because of the fact that the LFP supply chain is so heavily reliant on the Chinese market right now. So, if you were looking for a non-Chinese cell, you are really limited by who you get those cells from. You have Envision, which would be supplying LFP cells. However, Fluence has pretty much secured the entire offtake for their US manufacturing. And then otherwise, you're looking at kind of LG, Samsung, but at the moment, they're not going to be providing you LFP. They're going to be providing you NCM or NCA in Samsung's case, at least for kind of until the end of the year when LG brings production online for LFP. So, this market is very much at the whim of what happens in China. I would say one thing around the kind of cost point that you mentioned in terms of the market economics for solar and storage being deployed, policy and how that shapes up in the coming months and years in the US is going to be a big dictator of the economics. If we see battery tariffs, we're already looking at battery tariffs. If we see higher levels of battery tariffs than what we're looking at already, there is, of course, risk to the market. So, for context, if we think about the US battery market right now, for the storage players specifically, so 99% of the cases, they're going to be using LFP. All of that LFP minus Envision is going to be coming from, or ASC, depending on how you call it, is going to be coming from China. Right now, they will be facing a 17.5% tariff. From 2026, they will be facing a 35% tariff. And, that does have the potential to upset some of the economics of these project build-outs.
So, sorry I just want to dig into these points. So, NextEra, which says it's fastest to deploy and most economic, it might not be most economic if tariffs are raised on batteries that they need to buy from China.
Exactly.
It was funny
exactly.
the way
and it's not just at the cell level that we could be looking at tariffs. There's currently an AD/CVD anti-dumping countervailance investigation going into anode active material, which is heavily reliant, of course, on the anode supply chain is even more reliant on China than cell manufacturing. The proposed tariff level for that is over 900%. That recently got passed through the first kind of first set of first body to officiate it, and now the investigation will be continuing. From people that we've spoken to in the industry, a 920% tariff is very unlikely, but a tariff level of, say, 150% on the anode active material is plausible. And the key thing with this being brought forward is that it's not just for the import of anode active material, but they're also trying to make it so that it includes anything which includes Chinese anode active material. So if you import a cell with Chinese anode active material, there would be a calculation based on that, and it would increase the overall cell price. So, it's not just the headline tariffs that we need to think about. It's components and anti-dumping ones, and all the potential other tariff measures which could come in.
Okay, and I know you guys have done some good work at kind of before the election, scenario analysis, et cetera. But you said a big dictator of what will happen will be, this question. And I was laughing as you said, big dictator, because I think we have two big dictators, Trump and Xi, that are going to kind of like hash this out. And in this administration of common sense, I'm hoping that we will have a grand bargain of sorts where the Elon Musks of the world and, the Sam Altmans and others who want to build data centers, get together with utilities and say, you want to do it better, faster, cheaper, right? Mm-hmm. It's batteries plus renewables. And that will be part of, something that we'll hopefully see in some sort of an agreement. They won't just shoot themselves in the foot and say, okay, we're going to tariff all batteries now and anode materials and everything, and then just build, natural gas plants in America, which will take a lot longer.
I think on that as well. Sorry to jump in. I think there have already been made exemptions for stationary storage batteries. So that 25% tariff level, which is now going to be 35%, that's already in place for EV batteries. And stationary storage batteries were given an exemption until 2026 because of the obvious reliance on the Chinese market, and under the kind of pretext that would allow US manufacturers to get up and running and supporting the industry. So there may be potential that can be extended further into the future, given the lack of US LFP cell manufacturers. And even in the last week, we've lost two LFP hopefuls in the US, being Core and Frere.
I think Trump lets CATL and others build plants here. If he's willing to sell 50% of TikTok, and has already said that he's not worried about America's teenagers' data, going to China, I think you should be okay with some batteries here. Just last question because Rodney has a lot of questions. You said NextEra has a pipeline of 27 gigawatt hours. Now, and you said that it's probably a bridge too far to secure lithium. I guess two questions are, like, is the cost of lithium as important to a utility as it is to an auto manufacturer? Because that could get into it. And 27 gigawatt hours, how much lithium does that translate into? How many tons, thousands of tons, will NextEra need to purchase over the time frame that they're going to roll that out?
I would say in general, the way that pricing is indexed in the storage market, whether you are a system manufacturer or you're a developer, it will be based on lithium price. They will be definitely monitoring that and creating some kind of index to allow them to adjust price based on lithium. It's obviously not the only thing which is driving price fluctuations in this market. The price decline that's been seen in storage over the last year is incredibly rapid. We saw cell prices fall, or system prices rather, fall below $100 per kilowatt hour last year for the first time, and continue falling. So I think our Q4 estimate for system price was about $70 per kilowatt hour in the Chinese market. That is, you will pay quite a big premium on that in the US or in Europe, but those prices, I think right now developers are pretty happy with those prices they can get. So they will be looking at lithium prices as a kind of guidance, but it's a pretty good position to be in.
But it does it make or break, like, I'm going to go to sodium or I'm going to go to vanadium if the lithium price were to go to 20,000 or 25,000? Is it?
So, I think, and we can probably get into a lot of detail on the sodium side right now. I think 2024 was quite a kind of reality check for sodium ion. You had all this excitement in the kind of previous year and a half around sodium ion, that it was going to kind of sweep in and take over the storage market. And the reality is that, okay, the cost isn't competitive yet. But even if the cost was competitive, there's still some other metrics where it can't compete. So, one of the big trends that we've seen in the storage market over the last year has been to higher energy density cells and therefore higher energy density systems. So, historically, a 20-foot container, you may be looking at 4 megawatt hours. We now see 20-foot containers which are 6 megawatt hours, 7 megawatt hours, even 10 megawatt hours within a 20-foot container. And when you're, building a project and buying in containerized solutions, if you're getting 10 megawatt hours out of something that was previously 4, your project is way bigger. You need less land for the same equivalent project. You need less cabling, there's so many things that you save money on. So that energy density benefit of LFP and where it's got to is making it difficult for sodium ion to compete. Alongside that, the cycle life performance that you're seeing from some of these LFP cells, 15,000, 20,000 cycles, compared to sodium ion cells, which, they're getting there, but then they're not at the same level, means that these systems are going to last much longer than a sodium ion system, and therefore you'd have to replace it. And on the total cost of ownership, you're looking at LFP just winning again and again. Where we do see sodium ion and vanadium flow potentially kind of coming in, and we do see projects in China being explored, is for more kind of niche applications. Cold temperature, hot temperature, any sort of extremes, sodium ion performs well. So that's definitely one that's being considered. But yeah, we would need to see a significant spike in lithium price to make sodium ion really the kind of technology of choice for storage. 2 and 3 wheelers seeing quite a lot of interest in sodium ion, particularly in the kind of Chinese market. So yeah, one to watch that side, but for storage, LFP seems to be in a very good position now and just continuing to get better as well.
Okay, you pinned. I didn't. Thank you for that sodium question. I know that was one of Rodney's he was going to ask a bit later.
I was going to say you pinched one of my questions, but that's okay.
But you didn't answer the question I was trying to get at. With NextEra's 27 gigawatt hours, how much lithium is contained in that pipeline?
I don't have the conversion from gigawatt hour to tons, but I'm sure you guys can do that. That's.
I think I saw somewhere it was like 0.15, but that assumes that it's all has battery backup, which I guess we can assume.
This 27 gigawatt hour pipeline, that's purely stationary storage batteries. That's the figure we have for batteries. Yeah.
Okay, so that's a 27 gigawatt hours worth of batteries. That's not a 27 gigawatt hours solar farm.
That's purely batteries. Yeah, that we have in our pipeline from NextEra. Yeah.
And that's through 2032, I think you said.
Yeah, but
anyway,
that's the thing.
That's just one company. That's just one company.
Yeah, I think the key thing as well is if we think about, I'm just flicking to our database so I can get an exact number for you. But if we look at just the next 2 years, because realistically there's going to be so much that will be announced between now and 2032. It doesn't necessarily give you an accurate image. So for the next 2 years, we have 10 gigawatt hours in their pipeline.
10 gigawatt hours of batteries
in the next 2 years.
Just for the next 2 years. Okay.
Yeah.
Okay. All right, Rodney, go ahead.
Okay, great. Let me see what's left that you haven't asked. Iola, in the latest Rho Motion presentation, it looked like 2024's battery demand was around 1,300 gigawatt hours. For 2025, what sort of growth are you expecting?
Yeah, so I think we finished the year for lithium-ion demand specifically was about 1.225 gigawatt hours. For 2025, we're looking at 1.6 gigawatt hours.
Okay, so that is over 30% growth. Is that right?
Mm-hmm. Yeah. So what I would say with that is, That's our Q1 ESS forecast has been released, so that's within that. And we did upgrade our forecast somewhat, mainly, I'll say largely in China. So in the ESS market, we're expecting kind of over 60% growth next year, so very strong year. In the Chinese market, we're looking at, I mean, it's actually pretty crazy what's been going on in the Chinese market recently. So the development of projects and the timelines that we're working with has really reduced. So in Q4, over 100 gigawatt hours was added to the pipeline with a planned completion date of 2025. So
Right.
just like to put that into context, that's like the size of the market.
It's crazy. Yeah. So
Yeah.
based on what you mentioned earlier and we discussed on the shipment rates, means shipped next year is likely to be 0.5 terawatt hour.
Yeah, it could be getting up towards that. Yeah, so yeah, exactly. So yeah, our forecast for the year for storage, we're looking at about 350. So yeah, 500 is very reasonable for shipments.
Amazing. So there you go. So yeah, I mean, I as Howard mentioned a couple of years ago, I said it was going to be a terawatt hour, and I was already double everyone else. So I didn't want to make it bigger, but now I've got bigger because the way I look at it is, if it's cathode, it doesn't matter whether there's a difference between actual installed versus shipped. In the end, you've got to have lithium in it to make it. So that, in my opinion, you've just got to adjust your inventory numbers going forward. But anyway, that's just the way I look at it. So one of the other things was, which is interesting, was your EV sales growth forecast for China is 17% for 2025. I've heard quite a bit higher in other quarters. Again, CATL, maybe he's plucking some numbers off the ceiling like an auctioneer when when they're choosing bids. But they were suggesting EV penetration in China could exceed 70% quite soon, which would mean a 40% jump. Well, it depends, I guess, just on a single month. But what would you need to see in order for you to adjust your forecast of 17% up?
Yeah, so that forecast is our Q4 forecast. Our Q1 forecast will be out in the next few weeks. So that previous forecast was before the extension of the tax credit or the trade-in subsidy. So since the trade-in subsidy has been extended, and given the strength that we saw in Q4, we will be increasing our forecast. So we're looking at kind of over 20% growth in China this year. Q1 will always be a lull in China. You've got Chinese New Year. You've got kind of general economics that just kind of lead to that lull. The real test will be kind of into Q2 and how that performance kind of bounces back from Q1. But given the kind of extension of the trade-in subsidy, I would say, the Chinese market is looking very positive. In terms of, I guess, 70%, I think we ended last year at about 45% EV penetration. We did see some months where we got over kind of 50% level. So, maybe December 2025, you hit around 70%, but for the year, it's definitely a long way to go to get there still. 2026, 2027.
I don't think, I agree. I mean, but I think he might have just meant, maybe in a single month, but still unbelievably impressive relative to what, I mean, it's just stupid. But I think, anyway, we'll get to that in terms of capacity. But Europe, which it's hard to believe in 2021, I think they might have just beaten out China then, and now look where they are relative to China, is the EV demand. You've got the rise this year because of changing emission standards, but there are no further changes until 2030. So what we saw in the past is it sort of bumps and then it kind of plateaus unless there's a real rationale. The big issue seems to be price, something I've raised. I mean, the base models and the pricing is really expensive relative to us in Europe. Is Europe going to introduce enough attractively priced EVs that are competitively priced relative to their ICE equivalents to get the continent back on track, in your mind?
Yeah, I mean, it's a tricky one. So, the European policy this year is obviously very strong towards, it's a big step change in terms of what the OEMs have to do. Our expectation is still that not everyone is going to meet those targets. We are estimating a significant level of fines will have to be paid. Players like VW are in a particularly tricky position where they haven't formed a pool with other EV manufacturers in the same way that Tesla's formed a pool with a number of players. So, they're in a position where they're going to have to make a significant step change in terms of sales to kind of get to where they need to be. Our expectation for growth, we're looking at around 17%, 16, 17% in Europe this year. I think one thing that puts it into quite good context is, when we actually compare that to 2023, it's actually only around 13%. So because of how negative 2024 was and weak it was, we're not, it's not necessarily a particularly strong year that we are going to see from Europe, even with that policy coming through. Consumer sentiment and the lack of affordable vehicles does continue to be a barrier. There are attractively priced EVs arriving, I would say, but the kind of key thing around these is that they're attractively priced EVs, and they're not necessarily attractively priced in the context of cars more broadly. So, they're a good deal for an electric vehicle, but you can still buy an ICE for cheaper. At the same time, BYD will start production in Hungary this year. That has potential to kind of come in and supply the European market with good affordable vehicles. There's also rumors around BYD supplying Stellantis with LFP packs, which would enable them to kind of drive down their costs within Europe. So, I think OEMs in Europe understand the need for affordable vehicles in Europe, and that's really what the focus is going to be on in the coming years. Looking kind of beyond 2025, I think one of the key things is that the step change which comes in 2030 is a lot more significant than this 2025 step change. Therefore, if OEMs follow that same course of not really do much for 4 years and then panic when 2025 hits out to 2030, the work that would be needed in 2030 would be so much more significant than what is needed this year. So you have to kind of think that there will be some progress made in those intermediate years to not leave them in such a difficult position. But, at the same time, you have a changing political landscape in Europe with potential that, these rules could change. There's reviews ongoing into those 2030 targets and 2035 ICE bans. So, that longer term outlook for Europe is definitely more uncertain than it was a year ago, for example, where the political scene in Europe looked very different to what it does now.
Yeah, so it's either big changes or they're going to need to hire some very strong lobbyists, one of the two.
Yeah,
But,
exactly.
We'll see. In terms of Iola, in terms of the rest of the world market, do you think it's likely that that consumers are going to choose plug-in hybrids and extended range EVs as a sort of bridging technology before they go fully electric? Is that what you've got forecast?
Yeah, I mean, I don't think it necessarily just rest of world, right? I think it's an all of world story. We're seeing a real popularity of the range extenders in China. Hearing a lot from OEMs in the US who are planning to explore range extenders. Not necessarily much in Europe yet, but they're bound to come. Plug-in hybrids having a resurgence in North America. We're seeing, GM announce that they were going to bring back plug-in hybrids, having pursued a BEV strategy before. So I think the world generally is looking more to these transitionary technologies. the rest of world markets are interesting because they are so dominated by China. So really, what they're going to get is, and how they're going to evolve is going to depend on what China sends to these markets. So while we may not see incredibly high levels of electrification in these markets, maybe getting up towards kind of 50% by mid 2030s. The mix of plug-in hybrid, range extender, and BEV will really be dependent on what the Chinese players are offering to those markets and what they're building there as well. So Brazil being a good example where BYD is going to come in and manufacture EVs. I believe there'll be a mixture of battery electric and plug-in.
Right, and NIO is launching its first plug-in hybrid next year as well, so that'll get interesting as well. The next question I have is in terms of full self-driving, is that a game changer if Tesla can release the robo-taxi and ramp up to significant production? Will EV penetration climb substantially in the US regardless of what legislation and incentives there are?
Yeah, I mean, I guess there are two questions there to tackle. I mean, the full self-drive element, you can't dismiss it. Like, so much of Tesla's value is based upon it succeeding there. The method that they've pursued for full self-drive, kind of the vision rather than area mapping, provides them with that scalability that others don't necessarily have. But there's still plenty of barriers to overcome, I think, and be that legislation or be that random acts which make issues and those sort of edge cases. So I think it can be a game changer, but it still seems like there is work to be done in terms of EV penetration in the US market. We can expect it to continue to climb, yes. Slower than previous expectations, I think also yes. In terms of the tax credit, I think that's something that was almost imagined it would be gone on day one. And the reality from kind of what we're hearing is that it will likely stay in place for the next kind of 6 to 9 months. But there's this level of uncertainty in the US, which does. And that's coming from all levels, from policy, from what dealers will be telling people who are going in to buy cars, from OEMs. BMW announcing the other day they're going to reshift a lot of investment into internal combustion engine and hybrids. So from all levels, there's this uncertainty in North America. But despite that, I would say penetration will continue to climb, but it's just at what rate is the question mark, I think.
Okay, great. And if you look at how quickly ESS is growing, and EVs for that matter, as Howard said, we're really looking for demand to change the landscape for lithium. But in your mind, what are your thoughts on spare capacity throughout the battery supply chain? And when and if there could be, issues and bottlenecks, is there anything on the horizon, or can all systems go across all fronts because there's enough capacity out there?
Yeah, I mean, I think generally overcapacity is the story throughout the supply chain, and talking about storage in particular, one of the biggest barriers, I would say, over the last couple of years has been system supply, but that's really no longer the case. You have Tesla announcing they're going to double their Shanghai Megapack factory from 40 gigawatt hours to 80 gigawatt hours. That puts Tesla's system manufacturing capacity at 120 gigawatt hours, which would have been pretty unimaginable even a couple of years ago. And that's on top of course, all the Chinese players that are in the market as well. So, in that sense, there is an abundance of supply for storage. One area that we are potentially seeing some bottlenecks is around the kind of Gen 4 LFP cathode material. So a big trend over the kind of final months of 2024, second half of 2024, was OEMs, particularly kind of, or cell manufacturers, particularly CATL, BYD, and CALB, wanting to use this Gen 4 LFP in vehicles. This is a higher energy density and better cycle life and just generally higher performance LFP. However, there are only 2 companies that can commercially produce this cathode active material. And one of those, Yuneng, they've actually kind of struggled to do it consistently. So there does seem to be a bit of a bottleneck there. But it may be a case that, the market just needs to, or the kind of cathode, the midstream needs to catch up with the demand of the cell manufacturers there.
Okay. And we touched on it earlier, the differential between installed and shipments in terms of gigawatt hours. And now we've got, massive growth forecast for this year. So it's likely there was some inventory build, and, you mentioned how much was going out, but do you think there was involved in that potentially demand might have been pulled forward in anticipation of tariffs or logistical threats?
Yes, absolutely. Conversations we had with developers and integrators in the kind of final months of 2024, I guess, post-election, pre-inauguration, sweeping statements were made that there would be a 60% tariff on China, 100% tariff on China. So yeah, absolutely, there was that pre-buying anticipation to work out how they could get around that. I think there was a lot of that in kind of November, December. I think the fact that tariffs maybe took a bit longer to come in meant that it probably continued into the first few months of this year. Now that the tariff level has come in at 10%, I think there will be a little bit of a rebalancing, and that 10% level is obviously a lot better than it could have been. So that should really enable everyone to kind of continue and carry on as usual.
Good, yeah. It's always, as Howard calls it, the grand bargain. You're never sure where anything's going to quite land these days. But
yeah.
Another area I wanted to touch on in the ESS space is, and we've discussed this each time you've come on, is the increase and the R&D in terms of form factor up to 500 amp hours or more. Whether that's going to accelerate the usage of lithium-ion batteries in the longer length storage market. So I've seen some forecast of that sort of lithium-ion now taking up a fair whack of market percentage up to like 12 hours. Is that, where can this go to, I guess, is where can the boundaries be tested on?
Yeah, right. It's a funny one that a few years ago it was like 4 hours is the cap for lithium ion, and it's just blown past that. And yeah, we see projects being built now 10-hour duration, and that's being enabled by a couple of things. So yes, these large form factor cells is enabling that, but also the cell price is kind of the biggest thing. So the complexity of adding duration to a project, really you're just adding more cells. That's what you're doing. And if the cells are cheap, that's a viable option. So yes, ultimately these larger form factors and the low price of LFP will continue to enable these longer duration systems to be built. We track duration on a kind of regional basis and country by country basis each year, and it just continues to creep up and up. And part of that as well is around the market mechanisms that exist. So, for example, in the China market, historically, legislation that was in place would dictate kind of 2-hour duration as kind of guidance. A number of provinces changed their guidance to 4-hour. So suddenly, you're doubling the number of batteries that you need. So any sort of technological innovation can help drive this, but any sort of policy innovation or policy change can change it even more so, and really shift the demand to even greater levels.
Yeah, I mean, I had a look at your chart in terms of costs, and it's quite incredible where ESS has got to. I mean, it really is. But I guess, Iola, if we, lithium's, of course, a big component, but if we assume that the lithium prices bottomed out, late last year, and they, anything around these current levels, is there potential for the Chinese, ESS cell producers to thrift out any more costs or do any more? Or is this kind of, if lithium prices don't move, this is about as good as it's going to get?
Yeah, I mean, it's an interesting one. Like, talking to players in China, the general consensus is that a lot of these prices are relatively unsustainable. So the competition in the storage market is been pretty ruthless. So you have the top 3 players, which make up over 50% of the market, and then you have a long tail of these emergent cell manufacturers who have set themselves up to be kind of dedicated storage players. So the likes of Lithium, Cornex, who aren't supplying the EV market, they are dedicated ESS players. And that's just 2 examples. There's many in that list. And in order to gain market share and therefore become a respectable player in the market, you have to be offering a competitive or a cheap price. So there is this kind of ruthless price war going on in China in order for them to, reach that top 10 or get onto someone's list for, a recognized cell manufacturer for the storage space. So how sustainable these prices are, I think, is a big question mark. We did see some kind of level of a bit of stabilization in our Q4 numbers for system price. In that, they didn't decline as massively as previously. So I think, there is going to be some level of kind of resetting this year, where those prices will kind of level out and, potentially even rise a bit to some degree. Other areas where cost savings could be made, these larger format cells do enable you to work with lower prices because, you have less cells within a system. That means you have less cases for your cells. You have less racks. There's things like that where you can start to kind of remove some of the system components. But yeah, it is a difficult one when the prices have been really pushed to their limits in the last year.
And while we're on that, if you look at the cost per kilowatt hour, and if you assess renewables plus storage, can that formula now compete in most markets with or without subsidies? Is it now, a usage case
I think so.
regardless?
Yeah. I mean, it seems to be the case that's definitely, the economics work, right? The cost of solar is incredibly cheap. The cost of storage is incredibly cheap, and those 2 added together does make it a very viable option. Maybe just on that point, in the US market right now, the support for building storage is incredibly strong through the investment tax credit. So you're looking at 30% of your capex, which you can get back in kind of tax as a tax credit, and that can be increased up to 50% if you meet some of the bonus adders. So that level of support is incredibly strong and has supported build out of storage in the last few years. From conversations with industry, the kind of general consensus around that is that the solar paired storage section of that, which existed before the IRA, should be fine. Whether the standalone storage ITC remains in place, I think, is a bit of a question mark, and there's some concern around that, and that could change the economics in the US. If you're faced with no longer having the ITC, you're faced with a battery tariff, then maybe the economics do start to change slightly.
Okay, and we haven't touched on this yet, but in terms of recycling of older cells, given the price of raw materials, do you think, in your minds, can recycling projects outside of Canada generate sufficient returns if they're using LFP cells as feedstock?
I mean, with the current prices, it's definitely very difficult. Outside of China, LFP recycling really remains at kind of pilot scale. At the same time, access to LFP feedstock is probably less competitive than the NCM side. And you may even be able to get kind of LFP scrap at kind of no cost, given you just want someone to kind of take it out of your hands. But it's a tricky market at the moment in terms of the recycling side. You've gone through a year of kind of continued overcapacity, intensifying competition, and then a number of kind of big names in Europe and North America hitting kind of trouble and cancelling plans. So it's a difficult time to be a battery recycler, but I think that was always going to be the case, right? It's a market which is future-proofing itself for when the abundance of these vehicles reach the end of life and kind of come off the road or come off the grid. So it's going to be a case of kind of tiding themselves over for the next few years.
Okay, great. Thanks. Howard?
Yeah, you had mentioned Tesla and their Shanghai gigafactory growing. He made a comment, Elon did, in the earnings call that battery constraints have been a reason for slower EV growth. And I thought that was, relative to an overcapacity of batteries that you're talking about. So why do not everything he says is always fully accurate, but if you, what do you think about that?
I think the key thing with that is that previously they were able to use LFP cells, which would have been manufactured into packs, and then they could have been shipped to North America as packs. Given the kind of rules of the tax credit and battery tariffs, Tesla discontinued the LFP variant of the Model 3, and therefore would be more reliant on nickel-based chemistries in North America, which also would be reliant on them doing their own kind of pack manufacturing in North America. So I think that's probably where that linkage is coming from. So it's more a Tesla position given the tariffs and given North America's stance on China, rather than a general battery supply chain issue.
Okay, but half of their sales, I think, are in China and elsewhere, and I think the Europe ones take from Shanghai. So anyway, we just, our friend Jordan Giesecke, The Limiting Factor, put out a video yesterday that I watched in relation to that, because that wasn't highly emphasized in the call, and no one asked any questions about it. And so I think that outstanding there is a battery constraints. Okay, if he solves
what was his take?
Watch the video. Who watched the video? I don't remember all of it, but and then the final question or the comment that I'll make is that Rodney tweeted about from the CATL prospectus here, EV shipments. I think the number here is compared to yours. I guess there was a difference between shipments and deployments, but in 2024 they have 300 gigawatt hours of shipments. I think you had 205 deployments, but they show that growing to 1.4 gigawatt hours. And then they break it down as well by data center, BTM energy storage, and FTM energy storage. What's FTM, BTM, data center?
Front the meter and behind the meter.
Okay. And what does that mean?
So front of meter is grid, so anything that's renewable paired or standalone. There's large batteries, and then behind the meter would be anything from a power wall being installed in a house to a backup battery which is installed at a commercial, industrial, hospital, factory, anything like that. Telecoms, UPS. We would typically put data centers. Data centers are a funny one because they fall under both categories, because you have storage in the sense of kind of data of UPS. So historically, UPS has been provided by diesel gensets and lead acid batteries, and these are increasingly converting to storage to lithium ion. So that's one element of data center demand. So that's just that 15-minute duration. This can switch on quickly and ensure that power just always remains constant. So that's one element. And then you have the other element of data center demand, which we actually classify within our grid storage, which is more to support that massive power demand that's coming from data centers. And this could be paired with renewables. This could be, it will be directly connected to the grid in that sense, and we'll be providing that support rather than behind the meter, which is kind of standing alone, I guess.
Okay. Anyway, Rodney thinks that this forecast, which was from a Chinese research group of 300 gigawatt hours, looks low for data centers in 2030. But overall, the growth in the market from 300 to 1.4 or 1400, is nearly 5 times growth of energy storage demand. And I guess that goes into why Robin Zeng is saying that, again, energy storage could be 10x the EV market. So thank you, Iola. I mean, again, we're very focused on demand surprises here because there is a lot of lithium coming out of China and elsewhere, and the market for ESS is not well researched. I mean, you have been pioneering, in this regard. So any of our viewers, highly recommend you follow Iola. Okay, Iola, thank you again for a great, detailed analysis, and hopefully these demand numbers you're forecasting will be exceeded.
Yeah, exactly.